Dave Notting. I'm here at the Inside ETFs conference in Hollywood, Florida. I'm here with my friend Todd Rosenbluth, head of ETF and Mutual Fund Research at CFRA Research. Todd, we talk every year. What do you think the big story of this conference is?
I think the biggest thing that's happening is we're going to have a whole host of actively managed ETFs coming to market. There's semantics as to whether they're transparent or enough or not. That doesn't really matter. You've got firms like Rowe Price, like Fidelity, like American Century that have strong active management franchises, and they're going to be ETF versions of those by the next time we're here in 2021. And I think investors are learning more about these strategies, what makes them unique, how they can work. I think that's really exciting. More players in this space.
You don't think that there's a big difference between the transparent and non-transparent? You just think different strokes for different folks?
No, I do think there's a difference between transparent and non-transparent. I don't think it matters how they go about doing it. And so if you want an actively managed equity ETF from Fidelity because you believe in Fidelity, then you're going to care less whether or not you're getting the holdings being disclosed as of yesterday or as of a month or a quarter ago. I think you're going to be happy with the active management expertise that they can bring to the table.
Now you guys specialize in sort of portfolio level, digging in kind of analysis and ratings on funds, but you've made a big change to that methodology. Tell me a little bit about what's going on.
Yeah, so CFRA made a couple of changes that we announced at Inside ETFs. The first one is that the data that we acquired from FirstBridge, raw holdings data and classifications, is going to be powering our overall ratings. So we're going to have ETF level data and ETF classifications in the smart beta and the thematic world. We're also adding in some proprietary metrics looking at the holdings. So we've long had our equity analysts offer buy, hold, sell recommendations on the underlying stocks. We're now adding in a forensic accounting approach to it, more downside risk protection than we had beforehand. And then lastly, we're now using stars, or we will be using stars as the way that we describe our favorite picks. That's how we look at stocks, that's how we look at mutual funds. So a 5-star ETF from CFRA will have a strong holdings base, strong cost, a whole kit and caboodle that we think is going to be really positive for advisors and investors to be able to take advantage of.
Do you think that change towards some of these less transparent structures kind of messes up how people analyze these funds? I mean, you are the under the hood guy, right? That's your focus. If you don't know what's in the portfolio, does it mess up the ability to do that analysis?
No, we don't think so, because the data is going to be disclosed enough. There'll be enough information and there'll be changes, and we'll show what the holdings were as of that period of time. But as you and I know, Vanguard, for example, doesn't disclose holdings on a daily basis. We've been covering that and it's working out quite fine. I don't think we're going to see high-flying changes. Most of these portfolios that are coming out are buy and hold, blue chip growth oriented strategies. That works quite well with a holdings based approach from CFRA.
Great, well I can't wait to see the new data. Thanks for joining us.
Thanks, Dave.